All right, so in this video, I'm going to talk about the one setup that changed everything for me when it came to my swing trading. It involves an indicator called the Trader's Dynamic Index, or TDI. And this TDI, which I have plotted here, includes the RSI, which is the Relative Strength Index, how much the market is over or oversold in a particular period of time. And it's also a momentum indicator that gives you a sense of how bullish or bearish we are. And then also the Bollinger Band, which is the green line here, and the green line at the bottom here, which also kind of tells you how overextended or underextended we are. Now, when this RSI, this black squiggly line, has this pointed shape, this pointed pattern, and it's also outside the Bollinger Band, that's an indication that we're going to be reversing. So you see it here, for example, and then you see what happens next, right? Price comes down, reverses the other direction. Another example is right here. Right? We're outside of the Bollinger Band, and then price reverses, as in like it goes from overbought to now we start coming down to that oversold direction. Now this is the 4 hour we're looking at, and particularly I look at the 1 hour and the 4 hour. So 1 hour, 4 hour TDI. And when I see this kind of pattern forming on the 1 hour, and at the very least seeing price overbought or oversold on that 1 hour, 4 hour, the RSI being outside of that Bollinger, and then at least above 70, ideally 75 or above, or in the sold direction below 30, but especially below 25, but especially below 30. That gives me that indication. Now, it's not just the TDI alone that I look at. I also look at other confluences that give me confidence in knowing where the trade is going to go. And so with the TDI, I look at the 4 hour, and I also look at the 1 hour. And if I identify that it's a similar pattern on that 1 hour, so over here you see that 1 hour was also overbought with a similar pattern in that where the RSI is outside of the Bollinger. The other example I showed, we actually don't see that, right? Like that pattern formed over here on the 1 hour. If you go on the 4 hour, and I put the circle where we were overbought on the 4 hour, I was like right about here. On the 1 hour, you see we were overbought right about here. But then what happens is price tends to what we call diverge. So price continued to go up a little bit, right, in one direction, but then when it came to the TDI, TDI started to come down. That's an indication that we're going to be getting ready to reverse. So that will often happen where on a higher time frame, like the 4 hour, you'll see us overbought or oversold, right, or forming that particular pattern that indicates the reversal. But then on the lower time frame, you'll see it occur sooner, and then you'll see that the price continues to go in the same direction, but then the indicator, this TDI, starts to go in the opposite direction, and that's also an indication that we're getting ready to reverse. But that's not all I look at. The TDI is not all I look at, right? 1 hour, 4 hour TDI is very helpful for me and gives me a starting point to start looking for a potential entry or really assess the market conditions further. So when I see what I like to see on that 1 hour and 4 hour TDI, the next step is I go and look at the market structure. And I should also point out that I use this particular setup specifically for the British pound. Every asset that you trade, whether it's British pound, oil, gold, NASDAQ, Bitcoin, anything, and I trade a range of assets from futures to foreign exchange, crypto, options. Every asset moves differently, and it's kind of like building a relationship with someone, right? We're all human beings, but have different personalities, different character, all move a little bit different. And so when you get to know an asset, you develop relationships with them, and you tend to have maybe more of a synergy with some than others, and how you get a sense of how they move and how they operate. And so to understand market structure, you have to understand that the market moves in three ways, right? We're either moving up, we're moving down, or we're moving sideways. And so we move in three sort of phases, right? We have the impulse, right, where we move up, pullback, right, we move down, and a continuation, where we move up again, right? And when we're on an uptrend and we continue to be on an uptrend, we pull back and we continue, right? If we were continuing up from here, we would pull back, and then we would continue, we'd pull back and then continue. But then on the flip side, when we move to the downside, we impulse to the downside, we go down, we pull back or retrace, and then we continue. And then over here, you notice that we started to accumulate in this area and bottom out before we actually end up continuing up again. So now this is important to know. Market structure is important to know because it helps give you a read on what is on the direction the market is going in. Because when that structure, right, that impulse, pullback, continuation into upside or in the reverse, once it breaks in either direction, especially on a major time frame like the 4 hour, and 4 hours what I consider major, then it's an indication also that a change is about to happen, right? So over here, you'll notice that I'm going to draw this pattern right here where we had formed this bottom, right? Price came up, pulled back, continued on that 4 hour. But then right here, you notice that if you go down to the 1 hour, you'll notice that price was forming this consistent bottom. And we were actually more so ranging on the 1 hour. And we were ranging, and then from there, actually started to break to the downside. So once we broke underneath this area that we kept bouncing from, this was also a break in structure because we had now broken down below that recent low, that recent higher low. So now we were forming a new low, and then we formed a lower high, and then continued down further. And so when we broke structure, that is a significant indication that we're going to continue in that direction. Typically after we pull back. So we broke that structure, we pulled back, and then we continued. Now, being able to read structure gives you that confidence in knowing what is likely to happen. And the market is fractal. So what you see happen on the 4 hour, you'll see similar kinds of patterns happen on the 30-minute, right? And the 15-minute and the 5-minute. And so over here, where we're looking at what's going on with the price, now we're on the 30-minute. In fact, I'll go down to the 15-minute because that's actually what I look at most after the 1 hour really. You'll see on the 15-minute, right, on the way to that high point that we saw, that we marked on the 4 hour and the 1 hour. What do we have here, right? We have the impulse, pullback, continuation, right? Pullback. And then we impulse crazy. And then we started coming back down. But you'll notice, if you're looking at it from a 15-minute standpoint, that right here, this is that structure line for that 15, that higher low, right? And then we broke to the downside. And then, right, we pulled back, and then we started continuing down. So the minor structure, which I look at minor structure as anything below 1 hour, that minor structure breaks and changes before that major structure. And that minor structure also has a higher likelihood of breaking and changing than major structure. So that major structure kind of gives you that sense of direction, and then that minor structure can help you with determining your entries if you know what is going on with that that major structure. Be able to read that major structure. And so the TDI, right, seeing what's going on with TDI, it being over extended or under extended, and then seeing what's happening with price action, right? We were on this uptrend, and then we broke structure to the downside on the 4 hour. We're ranging on the 1 hour. Then we broke that. We broke to the downside, and then if you go down to the 15, which could be a great entry point, we broke even earlier. Right? Broke here, pulled back, continued down, and so that 15 break led to the 1 hour break, led to the 4 hour break, and then on top of all of that, the 4 hour, we had this evening star-like pattern here. And so all that together would give me the confidence to know that we're coming down. And the thing is, some patterns just look better than others, and in particular market conditions. So this is a very clean for 1 hour, 4 hour TDI in this sense, right? Where the 1 hour and 4 hour lined up exactly, it formed the exact kind of pattern that you want to see. And so honestly, had you just gone in with that indication right there, there's a high likelihood it was going to play out well. But then when you combine that with what's going on with structure, with how the candlesticks are forming, in this case, the evening star, and the structure breaking and then retesting, these are all other ways of adding conviction. So you might want to add to the trade when we broke the structure and pulled back, right? In addition to coming in with that initial entry. And so it's a combination of a TDI and then other confluences. And so I encourage people to look at these indicators, like TDI specifically is what I love. It honestly changed a lot for me because it provided a sense of just where we've been, right, in the market, because these are lagging indicators, and then structure kind of helps you get a sense of where we're going, and then you add on other confluences like I mentioned, the divergence or the candlestick patterns, and there's a couple other patterns and confluences that I look at when taking my trades. All of that combined has enabled me to hit 85, 95, 90% when it comes to swing trades. And I implore anyone to definitely also look at TDI and to take a look at market structure and how it forms as well when thinking about your swing trading.
And I want to touch on one other thing. So something you may have noticed if you're paying attention is that when it came to this recent area, which is July 3rd, you'll notice that we were overextended here. Right? If you look on the TDI, we were overextended. In fact, we were beyond 80 on TDI. The RSI was outside of the Bollinger Band, but yet we continued up. We didn't actually reverse. Maybe like a small, if you go down to the 1 hour, you notice that it was a small pullback, but then we just actually continued up. And that is another kind of reason for paying attention to some market structure. You'll see here that, so being on the 4 hour, right, we impulse down, pull back, continue, pull back, and then we continue, but keep in mind that we're now forming a bottom right here, right? It's an area of accumulation. And so then we make, we bottom out 3 times, looks like it was actually a triple bottom, right? So we don't continue down. Now we're just moving sideways, right? We're just ranging. But then what happens? Then we break to the upside. What does that mean? Now we've broken structure. We've broken structure again. So we break to the upside, and the expectation is once we've broken to the upside, once we've broken that major structure, we get a pullback, and then we get a continuation upward, and then we get a pullback. And then now we kind of have to see what happens. If you go down to the 1 hour, you'll see that we actually may be moving down again. But when you see that break in structure on the 4 hour to the upside, even though we're overextending now, you want to be careful about taking a trade like that down because we just broke structure to the upside. There's so much, there's such a significant amount of bullish momentum. And granted, this is actually pretty rare, especially on a 4 hour. When the 4 hours overextended like this, a lot of the time, even, to be honest, even when we break structure, a lot of the time we'll see it come back down, and come back down would just be that pullback, right? So oftentimes what you might see is, if I zoom to 15 minute, oftentimes what you might see is price would pull back to like this 1.273 area, which is a significant amount of pips or ticks, depending on the instrument you're trading. And in this case, we came back down a little bit, but not as much as we might have in other examples, and then we just really continued up. And so market structure, when combined with TDI, when combined with other confluence, could really make a difference in your trading.